Well, hello everybody. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming days. I do the show 4 times a week, every Monday through Thursday. Broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel LA Little. As far as what happened today, it was a push up off the Greek situation, right? There's a sense at this point that the Greeks are somehow going to acquiesce, I guess, and meet most of the demands, or at least enough of the demands to keep the money flowing. That put a bid underneath the European markets. We'll look at that here in a second. As far as what happened domestically, 0.5% to about 0.75% higher, pretty much across the board. Gold trades lower. I guess there's not as much fear because the dollar didn't move that much. It was up 0.2%. Oil was up, and we had mixed market elsewhere. The only big item here is the bonds. We'll look at the bonds. They took a good dive again today, 2%. So let's look at the markets and see what we have there. You know, if I look at this, what is most prominent to me is that you actually have those bearish retest regens taken out even here on the S&P 500. So if I draw that in and correct it here a little bit so that it shows up correctly, that top was right there. You can see we closed just over it. Volume about the same, not that much difference, but you're over it. That says, hey, more than likely this thing is moving sideways, right? No longer down. And so that is a positive from the perspective of the indexes, that the S&P, which is a good representation of the broad market, has actually joined the others, saying that it doesn't want to go any lower. And clearly the NASDAQ composite doesn't want to go any lower. It extends higher. That continues to extend. Now this one's already done ABCD structures on the way up, all that business. So there's really not much more to go here other than on the weekly chart. If we look at it on the weekly, you know, you can draw in some ABCD structures that would take you up to about where it's going. So this one's extending up to a target price point. If we look at the NDX, the NDX actually gets over that swing point high last week. The high of the swing point low. So we're talking about this price point, right? So it went sideways and was confirming. It attacked, just like the NASDAQ did, it attacked the high and fails on the first try. 455.152. You get 455.798. You go over it. You close at 544, so you're closing underneath it. Volume's a little bit lighter, so that's a test failure at the high. So again, that's another, you know, we've had, you know, over the last 4 or 5 months, we've had so many divergent signals. So for example, S&P says, okay, I'm going sideways. NDX fails at the highs. NASDAQ pushing higher. And what do we have on the Russell? Russell also presses higher as well. And so, you know, depending on where you want to look, you can find whatever story you'll want to tell. And in this case, it's a mixed market, in my opinion, domestically. Let's look at the internationals. So if we pull up the world markets, you know, the first thing you got to do is you got to go over to Europe, because Europe is where the story was today. You had a big spike up, so you got a 3.8% rise on the CACs. And the big thing about that is, what does it do? Well, it takes out this bearish retest regen zone, gets over it, stays over it. So that says that, just like we were just talking about here with the S&P 500, it says no longer are you doing this, you're more than likely doing that. And if you're doing that, that also says that you've set up your range now, because remember, this kept extending to the downside. You've set up your range now at this price point, and if you draw it out, right, you kind of got equidistant ranges, and where is it? It goes right back to test the boundary, and that's typically what they do. This is where it's going to either have difficulty or it's going to try to run its way right back up to this top. So tomorrow's kind of a big day. Of course, you got the Greek situation. If there is some sort of solution expectation and they start pricing that in to this market more, which is what they were doing today, then you're going to get that press up into the higher zone, and then that's going to give this market the opportunity to actually move even higher. Here's the DAX. DAX does the same thing and just barely gets over it. Price point on that high there is 11,437, 11,460. So you get over it, you break this ideal of a downtrend, you break that ideal and say, okay, instead of that, more than likely you got this. And if we look at it on the weekly, it's the same process you need to go through, and that is draw out your ranges and look at where they fall, make them about equidistant. And what does that leave you with? Well, it leaves you right at the boundary. It's just the way it works. So you've got the DAX, you've got the CACs breaking out of the bearish retest region. Remember, they'd already done that test and tried to regenerate lower. Actually fulfilled an ABCD structure on the CACs, I believe, if I remember right. The DAX not quite. And now coming back the other way. If we look over at Asia, the Nikkei did not, excuse me, the Shanghai did not trade, so that will be the number tomorrow. It probably, matter of fact, let's look at the Shanghai. Shanghai looks to me like it's set to try and bounce. And the reason I say that is it's been a very strong bull market. And as you come back in to do this retest again, if you look at your breakout bar here, volume's on it, and you look at how you're coming back into this zone with no volume, that's begging to go back the other way. So I would not be surprised at all to see Shanghai trade higher tonight, and ideally just simply trade higher from here. That would be the worst case. In other words, you gap higher, that would give you the best press back to the top side. If you look at the Hong Kong market, Hong Kong has been trading in a range, and we can actually draw that range here. So you kind of had a top range and you were trying to do the bottom range, didn't quite do it all the way, but that one is working its way back up to try to test that boundary, and I suspect that's where it's going to run into problems. If we look at the Nikkei, yen trades lower as Kurdo starts retracing or retracting his words. So it trades lower, and I didn't quite get that boundary right. And as a result of that, it's back over that boundary position, which was about there. And if we trade that back down, put it in, and then try to expand it so that it matches, you can see how the price points last night traded back up above it. It's in the higher range. The resistance on this one is going to be into these two bars right here. So that's these two bars. And so your real resistance here is going to be from this price point on up to the top. So anything up there is going to be hard. And I suspect it's going to test into this area tonight, right? And then that's where we'll see if it's going to make the run to the top again and test that high, or actually continue to build out the range. Now, if you want to be bullish on this, the most ideal case is actually to fail right into this area, into those lows, and build it out. Because why? Well, you probably want to buy more, and so if it were to build at a larger range, that would give you the opportunity to put it on at better prices. What better prices are there than to come back into this bar? That's the May 11th bar on the weekly. The low on that guy is about 19,467. You're trading at 20,428, so that would be a 1,000-point drop to get back down there. That would be the ideal spot to see this thing trade back to. And I suspect it has a possibility of doing that if the dollar um, doesn't gain too much strength and the dollar actually broadens out its ranges. Let me pull over and show you what those ox markets look like, because that's really kind of a key piece of all of this. If we move to the dollar first, we can see the dollar traded a little bit higher today, but this dollar it doesn't seem to me to have a reflection of the ability to get much higher. If I pull this back, looks to me like it is going to test this low again before this is done, or before you get any significant rise. We're talking about this price point. That price point had this kind of volume on it. You came into it, you didn't quite get to it here. Less volume, that's why the bounce is setting up. But I doubt it gets much higher than here. And if that's true, right, then you flip around and you try to do it again. Now, if the dollar were to get higher, in particular if it were to get over this price point, I think that would change anything. So anything over this area suggests a test of this high and potentially another break in one higher. Now eventually, I suspect this thing is going to go higher. It's just a question of where's the range, how's it going to build out, how long does it take. Bonds took another 2% hit today, right? They're gyrating down here trying to put it in a bottom, but they are struggling extraordinary. Volume not that much today. As it comes back into these two price points, let me draw that little boundary for you. This little congruent area there, that's going to probably come into it tomorrow. That's going to be the key area to hold. If it doesn't, it's an ABCD structure potentially to the downside. Coming from this high, right, it never quite finished. That would be the trade to the downside. So bonds still not out of the woods. If bonds do start to break lower in any significant way, in other words, they get underneath this low and keep going, that's going to put a little bit more fear into this market domestically. And my guess is they're going to eventually trade back to this area. It's just a question of how they do it. Do they come back up and trade back into this range first, or do they simply just break down again and extend? I don't have a strong opinion. I haven't for a while now on the bonds. Elsewhere, what else we got? Oh, the other thing to talk about is how the internals look in this market. So I'm going to just show you, and I'm talking about the domestic internals. We know Europe's trying to rally off of Greece. We know Asia probably is going to get a bounce going itself. How's the internals of the domestic market? Because if you're going to trade this market, you want something to put your back up against. In other words, the idea that this thing's going to go higher. Well, what's going higher is biotech, which has been a leader all along. And then if we keep just flipping, I'm just going to flip through them. Home builders trying to make a run higher. If we go to the transports can't do anything, right? They're doing a bearish retest regen off of this second time. If we go to the basic materials can't get anything going. If we look at energy struggling, right? Really nothing happening here, wants to go lower. Financials were trying to lead to the upside, but today was a fairly poor performance by the financials. Looks to me like they are going to try to flip around and come back down. If I look at the industrials, right? The industrials are struggling, right? They got a nice big bounce Thursday along with everything else off of Yellen's follow-up the next day. Friday, take most of it away. Today is a doji. That looks like that can go lower. Technology, struggling, right? If I go down this list, there's nothing showing me great internals on this list. It's consumer durables, which are safety play, like the utilities, both of them struggling. Now, healthcare is just like the IBB, right? But even there, you've got a doji on the highs. And then we go to consumer discretionary. Consumer discretionary on Thursday had a pretty big spike up off of Yellen, 78.19. Today you get to 78.16, so you didn't test it with volume. That still looks like it's range bound up there at the top, but still not a leader. What do you have leading this market? Biotech, security stocks have been leading it. I mean, you have to go down to the secondary stock sectors to find leaders. that's not exactly what you want to see with the market trying to break higher. That tells me if you're trading this market, you don't want to necessarily short it, but I don't think you want to get too long it domestically. It doesn't look like it's going to go all that far. And so that's it for tonight. That's my thoughts. I'll leave it at that. As always, I thank you for joining. Tell a friend, tell two. It's easy to spread the word. It's most appreciated if you do. On YouTube, it's very easy, to pop in there. If I get over there and show you, it's very easy to just pop into the YouTube area, right? And when you're in here as a user, not as me, you can easily, I think actually if I do this I can show you, you can easily, maybe I can't do it. There it is. I can do it. So let me shut this up for a second. There we go. You can come in here, you can share, they're all here. All you got to do is you have a Facebook account, share it. Twitter, share it. Right? Google Plus, whatever. Easy to do, very helpful, and I appreciate it, and I thank you if in fact you do that for me. If you like what you see, help me help you. I'm LA. That is, and it was your daily NeoTA wrap. Have a great night. I'll be back tomorrow. I don't think this market's going to go all that much farther, but again, it's news flow off of Greece. If Greece is quote-unquote settled, and there is an agreement, or at least the appearance of an agreement, in other words, fairly certain that you have an agreement, Europe's going to trade higher, and that's going to keep the U.S. markets trading up near the highs and trying to stretch. Take care, folks. See you next time.